chart on gold from the 1st of April. This was an article that I sent out on the 1st of April via a company called FSP Invest with the headline, "This precious metal just proved its safe haven status during the worldwide lockdown." And at the time, gold was trading at $1,450 an ounce, and my target was set to 1,960. And this was based on three main factors. The first thing is that the Fed announced that there's going to be quantitative easing, an estimated $2 trillion stimulus package for households and business loans to limit the economic problems during the pandemic, right? So that's more than the 9/11 terrorist attack and the 2008 financial crisis. So what happened was the money was being pumped into the economy, and millions of people in the US and the world were filing for unemployment, and this secured gold's safe haven status. So people were scared to invest in stocks and other indices, and they started trusting gold again. Then the other factor for my prediction was that there was a megaphone formation, or in South Africa I like to call it a vuvuzela formation, forming on gold. And you can see it started in, let me just see, when was this? 2018, in around October, the megaphone formation started, and then it ended in the beginning of 2020 in March. And the way the megaphone formation works is you expect the price to break out of the megaphone formation and then move up in increments according to the most recent low and high. So the most recent low was $1,450 and the high was $1,705. And if you subtract the difference and you add it to the high, you get the target of $1,960. And as you saw, gold shot through $2,000 for the first time in history. And now I have a few more different factors on where I believe gold will be heading, but let's just go to the analysis quickly. So you'll notice that there's still another megaphone formation. It is broken out, and the thing is, you don't want to mess with the trend. I know as traders we tend to want the market to turn around, but until it does so, you don't want to go against the trend, right? So the analysis that I have that the news came out this week is that there's been a record number of buying of gold ETFs according to Citibank. And majority of hedge funds and private individuals are now switching their exposure away from the actual gold metal and more into gold ETFs. And I think the thing about 2020 and last year is that they're looking for more efficient and effective ways to gain gold exposure without owning the actual metal and storing the metal. All right, so that's the first factor, is that there is a major influx of gold ETFs buying. The second factor is that the dollar has been weakening against every G10 and the most emerging market currencies since the start of August. And when the dollar weakens, gold goes up. All right. Now, the question is why? Why is the dollar weakening? Well, the thing is that the US has now got very low US yields. There's bad economic fundamentals. There's a lack of confidence with the relief package for coronavirus. So Americans are once again going to resort to the safe haven status. The third factor is that Warren Buffett bought into gold big time last week with over $562 million worth of Barrick Gold, which is the second largest gold miner. And you know what happens when Warren buys, people follow. All right. Fourth factor is that gold has pierced through the psychological $2,000 marks. And now we're going to technicals. And when it breaks through a psychological level, the shorters become very scared and they exit out of their position because they now believe that gold has broken the barrier and now it's going to continue up. And the buyers buy because it's broken the barrier and that it'll continue up. The fifth factor that I believe that gold's going to go up is that the interest rates are near zero for the first time with most countries. And investors are now taking their money out of the risk-free assets because it's not worth their time. The return is not good enough, and they're now looking to put their money elsewhere. They're also scared to put it in stocks and into indices, and with the pandemic at play. And so, what better asset then to buy than gold? And finally, there was the breakout of the megaphone formation. So it hit my target of $1,960. It broke above that level, above $2,000. And now if we use the megaphone formation, we will take the high minus the low of the megaphone formation and we'll add it to the high, which is a calculation I use for majority of breakout patterns with analysis. And the next target is at $2,500. Okay? So there are a number of ways that we can take advantage with the gold buying. And the first one is that we can actually buy the gold CFDs with one of our recommended brokers, such as Rand Swiss or Blackstone Futures. You can even look at Rand or whichever ones that's highly regulated. The second thing is that it looks like I'm going to be buying more gold companies listed on the JSE, because when the gold price moves up and there is a correlation that's positive, then we can expect the gold companies to move up. And Anglo Gold American has treated us very well this year with most of the with my trader services, with over 6 out of 6 winning trades. So that's the analysis and the way that I look at with gold.